One, it's been a while. We've missed you. Hopefully, you missed us. I'm back again with Real Talk with Robert Garcia and Mr. Eric Stewart. Gentlemen, how you doing?
Good to see you, Amir. Good to see you, Robert.
Yeah, good to see you guys. Good morning.
Good morning.
You guys doing anything fun in the last few weeks we gave you off? I'll take that as you had a lot of fun. So today's topic is interesting because I think this is something that everyone is talking about, which is the state of the market. What is happening? What's going to happen? What should we embrace for? Is it going to crash? Is this it? All the fun things that these two gentlemen, as our subject matter expert, will answer. But before we get into that, just want to let you know that Real Talk is brought to you by the Eric Stewart Group of Long and Foster. Real Talk is not just meant for consumers, it's also meant for our fellow realtors. We're going to discuss all things that these two gentlemen have experienced over the many moons they've experienced in this fun market, the up and downs and everything else that happens. So today's show, as I mentioned, will focus on two topics. One is the state of the market. What's happening? We'll show you all of the trends. We'll show you what's going on in the DMV market. You guys will kind of give us what we can look for. And then the next thing that is very interesting to me, and I'm sure, and I've seen some topics be thrown around with this or some content be thrown around, is why is now October? Why is now a good time to discuss wanting to sell in 2023? You might think it's a little bit backwards, right? You're like, why would I? Whoa, that's so far ahead. We'll tell you why now is the perfect time to look ahead. So let's talk about the giant elephant in the room, which is the state of the market. So I'll bring up this graph real quick, and this is the greater DC area. This is from 2019, so September of 2019, all the way up to August of 2022. We don't get our information or our graphs until kind of the middle of the month for the previous month. So Eric, as you look at this, as you see these median home prices, right? We've seen the huge increases. We're not seeing them drop, right? We're still seeing them up there. We're seeing a little bit of influx. But what do you take with this when you look at this and when you're sitting down with a seller? What would you say the state of the market in the DMV is right now?
Amir, this is showing a bullish trend line. So a climbing market in value with a normal rise and fall pattern within each year over the past 5 years. And we see this year is this last hump on the right-hand side of the graph, which shows the prices realized back in April, May, June timeframe were the peak prices. Very, very typical because homes that go to contract in February, March, April will settle in typically April, May, June. And that's when homes sell for the most money. That's year in, year out consistently, even in a bear market, which we're not in at this point. The bear market could be short. It might be a 2 or 3 week spring market. And then after 3 weeks, the market's quiet because there just isn't enough demand. What that trend line showed is tremendous demand still for real estate. And we're going to see in a few minutes the implied inventory, essentially non-drag. And that's a reverse of what I would normally say in the positive, meaning normally there's a lot of inventory that would put friction into the market once you get into June, July, or into the fall of this year. We're still not seeing a lot of inventory. And remember, this is a basic supply and demand issue. Demand is great. Supply is also still tight in spite of interest rates. So what we see is a bull market. The trend is intact, and we anticipate, albeit it's going to be a little bit quieter this fall because most buyers aren't thinking of buying typically from the end of October until the early part of January. We're going to flip around, come into another spring market, and we'll chat about why this is a great time to get ready to sell next year in a few minutes.
Awesome. Robert, you are sitting down with a seller, right? And there maybe their thought process is, you know what? My neighbor 7 months ago, 8 months ago, sold their house for $150,000 over asking, right? But as we see here in these trend lines, they're not coming back, but they are getting lower, right? Where the median home prices are kind of starting to level themselves out to whatever the market is at the time. How do you handle that objection from a seller of, well, they got $150,000 more, why can't I? How would you help them see these numbers?
Sure. Thanks, Amir. That's a good question. So this is right now where we are at this point in the market where some sellers still think that, maybe I can get the same value my next door neighbor got 6 months ago, and their mentality is stuck in that. And what I'm telling people is this is like the stock market. There are going to be good and bad days. And you just got to go with it. You got to plan for these type of events, and you got to be realistic. Otherwise, you're always going to be chasing the market. If you price your house too high, especially right now with the way interest rates are, that means that you're always going to be chasing the market down. And that's not a good thing, because once you take one, you go too high, then you make one price adjustment and the market is still not there. You got to make another price adjustment and so on. And honestly, in any real estate transaction, we need buyers more than sellers. Buyers are the ones that are going to dictate the final price. Realtor and seller can come up with any price, but at the end of the day, the market is what the market is, and a buyer will only pay what they think they're capable of doing. Now, there's some cases where some houses is still getting multiple offers. I think one of our guys here in the office, Jim Beckley, just sold a couple of homes in Potomac, and I think Eric has done the same. And they have gone above asking price. So there's still certain pockets in Maryland where houses will still sell above asking price, but that trend, it's coming down.
Not just Maryland, but also Virginia and DC. Same thing. You're going to find pockets across the DMV that are super strong. We just put a home on the market in Kensington, Maryland, in the Chevy Chase View area of Kensington, and the demand was off the charts, incredible. And just kind of almost an April sale here in the middle of October. We have another home in Potomac that has not even hit the market, already has an offer on it above asking. So there's, and people haven't even walked through the house. So same kind of interest in Virginia, same kind of interest in DC, and specific neighborhoods that are very desirable, a lot of demand, and just nothing for sale. So and contradictory to that is we've got some listings that have been on the market for a little while. We've had to make a price adjustment and still not getting necessarily the interest we would have back in April, where if you had 4 walls and a roof, you would have sold the house. It just,
If you had 4 walls and a roof, you would have sold. If you had a shed, you may have been better off. So Robert, you mentioned something which was interesting. And Eric, I would love to hear your take on this. You hear this term, it's a seller's market or a buyer's market or a this market or that market. But at the end of the day, there are three, right? There's 3 parties in a home sale, but we'll ignore that bank for now. But there's those 2 parties. There's a buyer and a seller. Would you say, because there needs to be a buyer demand before that price can go to a certain point, would you say we're in a seller's market? Because we were in a seller's market for a while, right? Are we now turning that trend into a buyer's market, or are we still in that limbo phase?
Robert, do you have an opinion first? I'll pitch in after.
I think it's definitely there is changing. Things are changing, but let me give an example right now, so we all can kind of like have an idea. I have a house for sale in Silver Spring. Seller went ahead and put $50,000. This been a home that it's been a rental for 7 years. Needed a lot of work. They put $50,000 into it to fix it, and now we come on the market. House looks beautiful. It's a little bit challenging because it's on a busy road, but it's still, they've done all the work inside of the property, bathrooms, kitchen, and so on. There is only one house for sale in the same neighborhood. We have probably had about 40 showings and no offers. So it is the other house that it is about the same price. It's ours. It's a little bit smaller, but the same thing. So with that in mind, I don't think there is a seller's. There's only 2 houses in that area, half a mile around it. I don't think it's a buyer's market yet. I think the way the interest rates have gone up kind of scared some of the buyers, and they now have realized the cost of financing a home, it's more expensive. How can they now be like, have the same price they wanted to have before with the monthly payments? And a lot of people pay attention a lot to the sales price versus to the mortgage payment. I always tell people, pay attention to the mortgage payment. That's the one that you're going to live with it for the next 30 years. Sales price, you'll forget about the sales price, but the mortgage payment, it's what's really matters. So that is just to give you an answer. I know that probably didn't give you a yes or no, Amir, but it is just what the market is right now. And this is we as doctors telling you, here are the symptoms of the markets. It's a little bit of unknown where we are.
Yeah, well said, Robert. I agree with your saying that. I think we got to remember where we are within the time of the year. Okay. It is October. It is not April. And it doesn't matter whether you're in 2020, 21, or here 22, and you had the heat of the market, which was hot all year long, 20 and 21. It still hit lull points. Maybe it wasn't extreme. Maybe it was very subtle, but the demand cycle always lessens at this time. So you can't draw an interpretive cycle change here right now, especially when the inventory remains extremely tight. So I think it still is a seller's market, but I also think that there's this absorption of the shock of cost. And let me explain it to you this way. This is my third time through a shift in the market. Okay. Major shift took place when I was in the business in real estate. I started in 1987 and 1990. At that point, prices had doubled between 1985 and 1990. And the cost of money had been coming down through that window. We were coming out of the Volcker era, coming out of high inflationary concerns. Your rates had hit something like 20% briefly before I got in the business back in the early 80s. And then I think the first time I sold a house, it was about 11.5 or 12% fixed rate, 30-year fixed interest rates. Still really high compared to where we are now. Those rates were drifting downwards. Prices doubled in the middle of that. And then there was just a shift in the economy. And so it was partly the monthly cost had gone up because of the price of real estate, but it was also an economic pullback that was taking place that shifted the economy into a buyer's market for the next 5 to 7 years. Then we went through the Great Recession following a huge run up where prices doubled and even tripled in some cases. And then prices dropped. If the further out you went, like concentric circles, when you drop a pebble in a pond, the further out you went, you saw prices drop harder. So if you look at Leesburg, prices dropped in half in Leesburg on a lot of properties. And if you went up north up of Damascus, you saw very similar things happening. If you went south towards Fredericksburg, or if you went east out towards the Eastern Shore, same thing. So prices dropped in that window. But that was also a function of the huge run up in prices. We're again seeing prices double, and then in some cases triple, and then an economic credit crisis that took place. We're not in a situation where we have an economic credit crisis right now. We do not have the weakness of purchasing power that has come from risk taking, zero money down mortgages, a lot of those things that predicated the Great Recession. We're in a position now where if you think about prices going up in 20 and 21, and then in essence, prices went up another 33% higher this year, just based upon what the cost of money implied. So even though prices didn't necessarily move, the cost of money implied another massive rise. Well, what happens every time throughout my career is there's always an absorption, kind of a getting used to and a basing pattern that takes place. We're just in that right now, where folks are just kind of, they don't know whether to believe that the prices that are now there can really be sustained or not. And I personally believe that they can be, because even though a lot of folks have been now priced out, not just by price increase, but also by monetary price increase, the cost of money, we still have a ton of people who can afford to buy real estate. And we're in an off season of the year. I think next spring is going to be excellent. I think prices are going to be solid, stable. We may not see a huge run up in pricing next year, but I think you'll see prices level, maybe even slightly increasing, not necessarily decreasing, unless, for God forbid, there's some massive credit crisis event that we can't imagine right now over the next 5 months.
Yeah, and then there's like you both said, in very good realtor term, I asked a question and you guys answered it by not directly answering it, but answering it still, which is great. I love it. But that's okay. I
Very
like that. I like
political, right? I mean, it's
very
like
political. I mean, I was from a former lobbyist. I was so proud of both of you. I'm not going to lie. Well, you mentioned something though as inventory, because that does dictate a lot of things, right? If there's got to be a house to sell. So let's jump into inventory. Now, we see, and Eric mentioned something earlier when we were discussing the median home prices, which is it typically takes, and correct me if I'm wrong, John, but it typically takes 30 to 40 days before you're, when those numbers are reflected, right? So we're
Mhm.
always, if you're looking at inventory, if you're looking at median sale prices in June, these are things that have happened in April or May, like you mentioned. So you look at these numbers, right? And we see these big shifts, this big gully that was here, which could be that initial sprint we saw, low inventory, high demand, and then we're selling houses for more than asking. But then you see this kind of a little shift of a downturn here. How do you guys interpret this inventory as agents when you're looking at this up and down? How do you coach your clients when it comes to showing them, okay, because of this inventory, this is where we're going to price your home? Robert, I don't know if you want to take a stab at it, or Eric, either one of you, feel free to jump in.
That's fine. I'll jump in. So the graph you're displaying here, Amir, it's something that shows you what happened in the past, and that will give us an indication of where we need to be, but also we need to look at what's happening now, because we need to now come up with a price that will kind of predict a little bit of the future of that house, if we'll hold or not. So as of today, as we speak right now, Montgomery County has active inventory 1,304 homes. This is condos, homes, townhomes, co-ops, which we don't have a lot in Montgomery County, but that's the inventory in today's market. So knowing that and seeing that trend over there, of course, you still have some room to be a little bit of aggressive when it comes to a house, especially if the house has the kind of upgrades like many buyers, the HGTV buyers, are looking at the kitchen, the bathrooms, the flooring, the hardwood floors, the parking situation, 2-car garage, beautiful backyard for the kiddos, finished basement with walkout, and of course location, and schools. So with that in mind, I craft a strategy, and then I will just tell a client, okay, here's what I think probably the highest point of your property will be, and here's probably the lowest it is. Let's just find a magic number. That's what I will tell someone to this graph what it is. Now, this graph may look very different in 30 days from today, because then we go on, like, things are slowing down a little bit more because of holiday season and so on. That could probably make a change. And if somebody wants to be super aggressive, then, as Eric will probably say, maybe you're more of a spring market candidate versus a fall winter market, and maybe we should try that price in the spring of 2023. But that's exactly how I'll probably help someone come up with a good price with the evidence and the data that we have. Remember, in Montgomery County, we've been in these 1,100 to 1,300 homes for sale for almost the beginning of the year. That's what it is. And in order to be into a buyer's market, we need to have about 2,000 homes of active inventory. So we are, 696 homes short to get to that buyer's market. So that tells you that we are not in a buyer's market. It's just that the market is trying to find a sense of direction, and some buyers got priced out. That's going to be unfortunate, but I guarantee there's going to be a lot of loans that are going to come up in the next couple of months that are going to find a way for these buyers to get into a house. Hopefully it's not 100% financing, no docs. I hope those never come back. That I'm sure there's going to be some creative lending opportunities in the future.
Robert, and Eric, I would love to hear your point on this as well. But Robert, would you mind pulling up the stats for DC and Virginia as well? Because you were just mentioning the actives. Maybe by the time Eric has kind of told us his opinion on this and how he uses this graph, you could tell us those numbers as well.
By the state, or by a county?
I mean, I think I think county. I mean, or
pull
state.
Fairfax
either.
County.
Yeah.
Pull up Fairfax County. Pull up DC if you can. And then, as far as the answer to this question, this this wave sign, okay, that you see here in inventory, which has just again continued that same trend downwards over the past 5 years. You're looking at, we're in an inventory peak right now. In fact, it peaked already. It may be, and this is where in 3 or 4 months, if we see a break to the upside in inventory, meaning creeping across the DMV from here, it's about 10,000 homes currently on the market. We're at about 10,000, and that's Maryland, DC, Virginia, in the greater Beltway area. That's 10,000. Go back last year, same time of year, we were about 10,000. We saw this capitulation, just means drop off in the number of houses for sale into the early part of this year, January period. So even though Montgomery County, as Robert's example is, it's stayed very tight in a very tight band. The entire area has actually seen a typical swing increase in inventory as we go into the fall. This is part of the reason why prices flattened, and you're seeing prices off the peak of the spring in some areas, not in every area, but in some areas you're seeing peak prices off about 10 to 12% right now. Still, I'm looking at this saying, okay, I don't expect there to be a major shift. A break to the upside would mean a massive increase in inventory going into the spring market. In fact, my prediction would be, based upon the trend that we see here and the trend I've seen for the entire 35 years I've been selling homes, is that inventory is going to drop back down into a low trough. Maybe it won't be 5,000 homes. Maybe it'll be 6,000 or 7,000 homes by the time we get to January, but it's still going to be low, serving the entire metro area, which will fuel a good bull spring market next year. Again, I always try to price into the spring where I think prices will go based upon the demand at that moment in time. And price is the last thing that I focus on with my sellers before I put the house on the market. And I evaluate from 6 different areas. I evaluate pricing based upon, the timing that we're looking at, overall market direction, the condition of the property, the replacement cost, which is much more important now than it was forever, because now it costs so much more to buy stuff and then pay someone to put it in. So there's a lot of different pieces. There's 6 total. We're going to see a good spring market, in my opinion. Of course, we don't know till we get there, but the trend is your friend. And if you stick with the trend as your friend, you're going to be right 90+% of the time. All right.
So Eric, you said something about the price, and I'm sure some people are probably wondering, why would you set the price last versus upfront? A lot of people really want to have that price immediately, but I think that's very important for the audience to know, why do we always wait until the week that we go on the market to set the price?
Right. Yeah, it's a good question. When we first meet with a home seller, we determine the fair market price based upon those 6 factors. We also look at what prices are above and what prices are below. We look at the square foot cost as well. So we come up with a general sense of pricing, and then when we put that property on the market in the coming soon or quiet listing as a tool that we use to market our houses, we can get a finger to the wind to get a sense of what the market demand might be like. And in some cases, like this house I mentioned to you in Potomac, we put on the market at $1 million coming soon. It's going to go on the market tomorrow for $1 million. We already have a house. We already have an offer from someone who hasn't even seen it above the asking price. They'd like an answer before we actually go any further. We're not going to respond. We're going to wait and see what the market will demand. I think the cycle here is still so intact, Robert. So continue on.
Okay, Amir.
So one thing I wanted to show, and I just pulled this up, is this is the month's inventory of homes for sale, right? So you have these kind of like how many months worth of inventory, something that you guys have mentioned before. And this is kind of thrown in there because you guys were talking about it and I found it. So I would love if you guys could take 90 seconds each to just tell me how you interpret this. And then we can move on to days on the market, because that also plays a huge role for a seller, an agent, and buyers as well. So this is months of inventory. You see how it starts all the way up here. and then this is where we are now. And this is on a national scale. So this is from the National Association of Realtors. So Eric or Robert, either one of you, take 90 seconds and tell me how you guys interpret this and what you think would be ahead for the months of inventory.
Well, I'll speak first if that's okay with you, Robert.
Go ahead.
Looking at the peak of inventory, 2011. Remember, we're coming out of the Great Recession. Into 2013 was really kind of the major shift point, in our opinion. 2012, 13, thereabouts. And I say clearly there was a huge drop from 2011 to 13, but we really settled into a long-term trend pattern starting around 13, and you see that. That's that big drop from the left down, and then it rises a little bit and drops again. And then from then on, we just see this consistent flow downwards over time, with a rise in inventory in the fall and a drop in the spring a little lower, and a rise in the fall and a little lower in the next spring, and a rise and a little lower, and a rise and a little bit lower, all the way to this massive drop in inventory on the very tail end of this. It almost looks like it's going to hit the bottom. And we see this double bottom pattern here, which you see, it's kind of like a W on the far right side of this. Now, my opinion is we've already seen a break to the upside here on the right hand, where we've exceeded the pattern that was previously set. We're right at the edge of it. And I think that nationally, there are a lot of places that buyers can simply not afford to purchase unless there's a new set of products in the financial industry that will allow buyers to buy. We've been in a 30-year fixed rate environment for the past 10 to 12, 13 years, where buyers would not take arms out. There was a lot of fear of risk and whatnot. We're now going to see the 1, the 3, and the 5-year arms come in. And for those who don't know what I'm talking about, an adjustable rate mortgage is one that's fixed for the first year, and then it adjusts every year after that and floats according to the prime rate here in America, or the LIBOR, which is in England, United Kingdom. So that we're going to see more risk taken in order for folks to be able to get into houses, because this big bubble of millennials who are buying, it's just not done yet. There's tremendous demand. And in key strong markets where there's employment, like we have in this area, from the federal government, all the biotech, and now, the Amazon move in, and a lot of the tertiary businesses that are supported by that, we're going to see this area remain very robust, I think. But I think you'll see inventory nationally come back. Unless rates fall down, we'll see inventory creep. Just today, Amir, I was just reading, we hit the highest point, 6 3/4 on a fixed rate last week across the board. And just not to belabor this issue, but compare that with a year ago, at rates at 3%, and we're now at 6 3/4. You might think, well, it's more than double the interest rate. It is, but the monthly cost doesn't go up the same way. It's an increase of approximately 40, depending upon where you were exactly in that range, 40 to 45% in the monthly cost of buying a house, which is a huge swallow for a lot of purchasers. But you don't have a lot of choice. You don't have a lot of houses. So I think we'll see inventory creep. So my interpretation, this was more than 90 seconds, right, Amir?
A little bit. It's okay. You're at 95 seconds.
Anyway, so yeah, I think we're about to see a break to the upside in the national trend, even if our local area stays robust. Thank you.
Mr. Garcia, you have 95 seconds.
Great, thank you. So my interpretation of this is, as I'm having meetings with clients, is, let's put it this way: builders are not building at the same pace they used to for many reasons. The cost of labor, cost of materials. They haven't been able to sell some of their current inventory, and then you have that portion which is going to continue to keep inventory very tight, and you also have a big section of people that already own a house, that probably refinance their homes at a 3% interest rate or below. Now, for these people, what's the incentive to sell their home and go and buy something on a 6.5% right now? Yes, they're probably going to have a ton of equity on the property, but there is no incentive for them, because they're probably going to be paying almost the same amount of money for whatever, for less square footage, maybe newer, but less square footage to what they have right now. So some people say, like, maybe I just need to stay where I need to. Those two big factors are going to continue to apply pressure to the inventory moving forward. and we know supply and demand, right? Less supply, high demand, prices go up. Just as straightforward as that. There is a graph here I want to show you guys that I pull here. Okay. This is from our broker here. Let me just zoom in into this real bit here. So this is just to kind of see the counties. This is for month of August. But look at the new listings based. This is comparison of August 2021. Look at how the pressure continues to be. Yeah, interest rates have gone up, have almost doubled from last year, but there still is less inventory in some of these counties. So I think the trend is probably going to continue this way. Is this going to be all nationwide? Probably not. The whole nation is going to experience here, like places like Idaho Falls already experiencing 20-30% in price drop because people just don't want to buy. But excuse me, but around here, I think we will probably continue to see big pressure because of the low inventory.
Awesome. Well, that should tell you why recession-proof areas are kind of recession-proof. So what I want to get into next is there's two slides that I want to, and we can quickly cover these, is I want to talk about the days on the market and then homes sold. And these are all the greater DC area, but the national averages and all the national numbers are around the same thing as well. So what we have here is the next thing I want to look at is days on the market, right? This gives you an idea of how quickly homes are being sold. And Eric just gave you a really good example. He has a house that hasn't even hit the market yet, and people are giving him offers, haven't walked through it yet. So that used to happen a lot more a couple months ago, but now it's still, you can tell it's still happening. So this is the number of days on the market. And again, this only goes up to August. But from a perspective of looking at how, you know, we've seen these big trends, right? And we see kind of this up and down, the seesaw way of up, down type of thing happen here. This number is most likely going to increase a little bit. We're going to have a good spring market. So we'll see that number kind of normalize, whatever normal is in this time now. But how do you help your client see and understand that we are not in the same market we were before? It may take you, before it was 2 days on the market, it may take you 10, 15. And you mentioned something else, Eric, is that we have clients now, and I'm sure all real estate agents do, that the property isn't selling, right? So those days on the market start to increase. How do you as agents battle against what has happened previously? And how do you guys help your clients understand that, hey, this number can increase?
Well, I'll give you a quick example. I've got a property on the market right now in Fairfax, and it's a lovely home, pretty cul-de-sac, but the demand for the house is not there right now based upon its location and condition and the number of houses on the market in that particular area, which is actually more than enough. And so there's just happens to be like in this particular puddle, as I like to call it, the number of houses in that puddle is just a little bit more than normal, and the demand for that puddle is not as great as the supply. So we have two choices. The first is to make an adjustment in the price to try to get the interest in that house within that puddle against the other properties that are available. The other is to pull the property off the market and rest it and bring it back up into the spring of next year, because we know, based upon the trends we've already talked about, the inventory is going to drop going into the next year. So why try to get it sold now by just lowering the price rather than bringing the property into the better, strong market that's going to happen just 3.5 to 4.5 months from now? Unless someone's got to sell right now, my advice, and I think Robert's and all of our advice to our clients, is an adjustment may be necessary and appropriate from a first blush coming on the market, but capitulating, dropping that price hard to just get it sold now, unless there's some desperation to be done, or it's just family interest. Sometimes there's 6 siblings who are all trying to sell and are only going to get $5,000 each. And so it's like, they're all like, yeah, it's only $5,000 because that's what it is to them. And so they make an adjustment. You know what I'm saying? So I would say wait, patience, give it a 90-day rest, and then come back on the market in the middle of February. So,
Mr. Garcia?
So, as we always train our agents to say, due to the lack of showings, the agents' feedback, and the overall market trends, it looks like the market might be potentially rejecting the price that we established. Options, as Eric said, move forward, wait a little bit more, but it's proved, it's already, we know that that price is not going to get us anywhere. Make an adjustment, or just take it off the market, give it a rest, and just bring it at the best time of the year to sell a house. If you don't have to sell right now, just take it off the market. I wouldn't risk it. If I were to be a seller, I would just probably wait for the spring of 2023 to sell my home. Yes, interest rates are going to be higher, but it's right here, the evidence we're giving you all. Also, the pressure in the inventory will be there. So chances are that we have better chances now to achieve the price in 2023 to achieve it right now. So just give it a break, about 90 days, and come early on the market. Don't wait until like the middle of March. Just be the first ones to hit the market middle of Feb, and your house should be sold by then.
I got a question from a seller saying, well, what if rates keep going higher? What if they go to 7? What if they go to 7.5 or 8%, God forbid? Well, the fact of the matter is we can't control what the Fed does, and we can't predict what the future holds. We can only operate in fear or faith at any given point, but we can't operate in both. We know in faith, based upon the trends, that we're going to have a good period of time in the spring, and it's been that way, and it was that way early in my career, and it's been that way even in the worst times. So even if the price of money continues to climb in order to try to stop inflation in America, we still think that next year for our market is going to be very, very good. So I wouldn't worry too much about it. And again, when we get to that point in time, we can cross that bridge in real time. And if you're a real estate agent watching this today and you're not sure how to have a conviction about how to guide your clients through their processes, well, we at the Eric Stewart Group of Long & Foster, Robert, Amir, myself, and our team are welcoming agents to our team to come in, meet with us, and discuss how we can help you sell real estate with us and get the economic knowledge and expertise so that you can not just help a client prepare but negotiate from a position of economic excellence, knowledge, and skill, but also with the right objection handling techniques. We are a group that is not high pressure, but we are all about family, and we're all about making you successful as an agent. If you're joining us today and thinking about a shift, we invite you to talk to us at ericstewartgroup.com.
So just to add on what you just said, Eric, as you always say, we realtors get paid to put deals together, and it's our obligation to get very resourceful and look for opportunities. So when a client tells me things like that, first of all, we don't control what the Feds are going to do, and they keep going up. That's their thing, because they have other goals, and they rather just reduce the inflation and put us in recession versus other things. That's their thing. But you got to get creative. So something that got my attention recently, and you probably, Eric, remember these type of loans, is the 2-to-1 buy down loans.
Sure.
So that basically builders all of a sudden got caught like into interest rates going up and up and up, and then all of their inventory actually it's just sitting. And for a builder to have a beautiful home built and finished, ready to move in, just sitting over there, it's a bad business. These guys have to sell those houses because they got to start moving, get more money financing to the next one. So the 2-to-1 buy down, it's actually a good alternative. And I already consulted with a couple brokers. Not every lender it has the program out there, but almost every lender is in talks with investors to start bringing those type of loans. So with that in mind, you just got to get creative. So it's again, what's the most important thing for a buyer? It's the monthly payment, right? And that's where we need to find solutions around that. What's the most important thing for a seller? Just net the highest amount of money they can after all the expenses. So we have to find a solution for that, as you said.
Yeah, just to explain a little bit of that 2-to-1,
yes,
and even
please. Another
scenario, the 2-to-1 is essentially the first year of home ownership. The interest rate is purchased down to a lower number. you know what your 30-year fixed rate is going to be. For instance, let's say the rate is at 6.75 or 6.5 right now, whatever you get from your lender. That's what the 30-year fix is. The builders are offering for the first year for the rate to be 5.5%, and they're paying the lender to get that rate locked for the first year. And why are they doing that? Because they want you to be tantalized to look at that, what that monthly cost will be in the first year, and the likelihood that rates will continue to just climb forever is not likely. But at some point, it's going to hit a wall here. And based on my conversations with bond brokers and folks that are in the zero coupon bond and that industry, we're kind of at a breaking point right now, if not already. 6.75 was the magic number a friend of mine gave me, who's been trading bonds his entire career, that at that point the corpus or body of debt in America couldn't sustain that kind of an interest rate without a pullback. So that's not to say that will happen, but it's to say there appears to be some consensus in that direction. And if that happens, you buy the first year in at 5.5, you have the fixed rate at 6.5, and then the builders are hoping that maybe the rates will drop. You'll be able to lock in at 5.5 long term later. One more creative suggestion. We have a client of ours who's a veteran, and he locked his rate in at 3%, actually a little less than 3% as a vet, when he purchased his home 2.5 years ago. The price for his property's gone up from around $700 to around $950. He's got a loan that is assumable at that 3% rate. So if he's willing to give up his eligibility with the Veterans Administration to get a future VA loan, he can actually use the tool of his assumable mortgage to attract buyers who would be able to assume roughly $700,000 of the $950 sale price, $700,000 of that debt at 3%, and borrow the difference at maybe 6.5. So his monthly cost will be significantly less than, for the buyer, would be significantly less than if they went out and got a 6.5% mortgage. You can imagine. So use the tools you have as a seller to capture your higher price. And I think there's a chance in that situation, if he's willing to give up that VA eligibility, that we'll get an extra $50,000 in sales price because of that. So it can be really beneficial. So price of money. Go ahead, Rob.
This is, and I would say, like, before we move on, because I do want to hear what you think is next, right? What's going to happen by the end of Q4, beginning of Q1, and then into Q2? Because Eric, you've mentioned a few times you are thinking we're going to have a great spring market. There might be, things will change, so on and so forth. But this is why it's important to hire a good realtor, because when you hire somebody who's not experienced or doesn't have somebody in their team that has this experience, they don't know this stuff, right? They don't know what's this, or what is a 2-to-1, or how can I get creative to put these two deals together? And so it's important. And as a new agent, you're not going to learn that unless you're making the mistakes or somebody's helping you understand this. This is why it's really important. And part of what we have is the Market Ready Guide. And I'll show you guys the best place to get is go to ericstewartgroup.com. But in our Market Ready Guide, we have 10 questions to ask a realtor before you hire one, the hats that a realtor wears. And we invite you to go in and download this. It's free. We don't charge anything for it. We are huge on educating. So go in, download it, read it. If you have any questions, give us a call at 800-900-9104, or just visit us at ericstewartgroup.com and just, how can we help you, right? Whether you're an agent or whether you're somebody who is just thinking about selling, buying, this is a great platform for you guys to ask your questions. But it's important who you hire. Who you work with matters. And it has never mattered more than I think now, because yes, like you mentioned, there's a lot of millennial buyers, right? Myself, I bought back in 2020. I bought in September of 2020. I won't say what rate I got locked into, because I'm sure there might be a bounty on my head after I say the very low rate. But it helped because I was working with people who I trusted, not their only trusted, but they weren't sugarcoating it, right? Like we would walk into properties and it'd be like, well, you don't see this, or we were getting outbid on properties that I didn't see the value in, but and at that time I was like, I really want to get into a house because I don't want to keep renting. And who knows? If I didn't have an experienced agent, I may have made a mistake that I would regret now. So who you work with matters. Please, please, this is the biggest purchase or sale you're going to make. So really, really vet who you work with. So having said all those fun things, you guys have experienced this, right, Eric? You've experienced this up and down the seesaw many times. Robert, you've experienced it in 07 and 08. What's ahead for the end of Q4, right? The beginning of Q1 and then into Q2. What do you think is ahead for, then let's just focus on the DMV market, right? The national stuff will change, so on and so forth. But what's ahead for the DC market, Eric? What do you see happening in the next 4 to 6 months?
Well, I think the inventory is going to remain tight, especially in the key areas, key locations where the demand is strongest. And that is all about we call it the ASLO, which is the accessibility and the location, the elevation of a property and some other factors. It's those things all together are what draw people to be in one location or another. So it's, convenience to a metro, whatever it might be. And it's going to remain because the general area of the DMV is so strong, and there still is this sucking noise into the DC area. It's like just pulling people into our area because of the growth that's continuing to happen. And it's not growth in housing stock, which is to what Robert said. We're not increasing the number of houses to the numbers that we need for the demand that we have, which is why rates for rentals have gone through the roof in our area. And that's putting further pressure on the purchasing cycle, because if you're paying for a 1-bedroom apartment in Logan Circle, if you're paying $2,300 for a 1-bedroom in DC, or $2,500 in Foggy Bottom for a 1-bedroom, which one of my clients' children is paying for a 400 square foot 1-bedroom condo, apartment. You look at that and you think, okay, what can I buy in a house? Well, guess what? You could buy a $450,000 or $500,000 property. Maybe it's not that convenient, but there's a dramatic argument for still buying. So I think just, bringing it together, I think our demand is going to remain strong. I think prices are going to remain flat with an upward bias still. The only potential, I think, is next year, instead of having a long spring market like we've had every year, cycling into an overall sort of like fireworks go up, sales come down cycle that we typically have in July, it may be shorter. So we may be super strong on the front end, anticipation of appreciation, fear on the buyer's side, and then we'll see maybe more stock come into the market, maybe especially if prices rise and rates stay high. We'll see the market shorten, maybe finishing by the middle or the end of April instead of into May. We'll see what happens.
Robert?
So my 5 cents is that I think this is the best time to be a buyer. Honestly, I don't, you will say, well, you're crazy, you're nuts, because interest rates are high, but so are the incentives you can also go after to buy a new construction. Now builders are offering you 2-to-1 buy down incentives on the loans. They're giving you 1 point below whatever the outgoing rate is, just to lock you in. They're finishing a lower level at no additional cost. They're giving you, X amount of money towards your closing cost. So there is a lot of incentives right now, so you can go after and take advantage of that. And so it will probably, some sellers in certain parts of the DMV area, you're going to see some of that where they're going to have to maybe, now we're willing to offer some closing costs because, the house is not moving or whatever it is. So to me, best time to be a buyer right now. You don't have your home inspections come back to as normal, your appraisal contingencies come back as normal, financing contingency, any other inspection you want to do, you can put them back in the contract, because guess what? That's not the game as it used to be before. So buy a house right now. Best time to do it, and that will be the thing. Of course, give us a call.
It's always good to talk to a few agents, as we always say, talk to a few, don't settle on one. Somebody may have something that you like, but it's always good to interview a few people. But it's interesting that Robert said this is the best time to buy, because everybody, I mean, you look at the normal things, right? And I think that's the issue. It's like we look at rates and we freak out, but in reality, that rate hike could only, like you mentioned, like 45% of your monthly. So what's your monthly? Focus on that. What is happening with your monthly cost? Is it going higher? Is it going lower? And don't forget, when you rent, you're paying somebody else's mortgage. So
Right.
make the best decision that's for you and your family. So we're going to move on to why now, as crazy as this sounds, why now is a good time to be interviewing, to be talking, to coming up with a strategy with the right agent to sell your house in 2023, right? If this is the best time, why is that? So I'm going to show a graph in a little bit. Before I do, I want to hear why you guys tell your clients this is now a best time to prep to launch in 2023. And in this graph, when I show it, it's going to show a 6-month market prep. We at the Eric Stewart Group, with experience, we've been able to bring that to, we have it at 7 weeks, 30 days, 60 days, 90 days, and all the way up to 6 months. So this timeline is shiftable, but it just shows you why we do certain things and how we continue to market your home while it's not even on the market. So, Eric, why is now a good time? I'm a seller. Why is now a good time for me to be calling the Eric Stewart Group and saying, hey, I need you to come over. I want to look to sell my house?
Amir, great question. We have an old joke in the business that the 4 Ps of real estate, which is oftentimes what the old focus was, which is put a sign up, put a lockbox on the door, put it in the computer, and then pray that it sells. Okay. Those 4 Ps are not the full extent of what good real estate practice looks like today. In fact, when you're interviewing brokers, you're looking at all the steps that each broker brings into the transaction. How many steps do they have? What is their preparation, marketing plan, negotiation strategy, and whatnot? When the market's excellent and you put up a house that has 4 walls, no bathroom, and backs up to the Beltway, and it sells with multiple offers, it doesn't take a whole lot to sell, right? So we're in a market
wonderful.
now. Yeah, I mean, it's really delightful, right? So the key is, like in our case, we divided the real estate process into 119 individual steps to build a process from the beginning to the end, and then have identified who is responsible for those processes so that an agent in our group has a set of responsibilities at what they do best, whereas the other members of the team are there in supporting enterprise to make the agent successful in making the seller or the buyer successful. Does it make sense? Because it's really all about the success of the buyer or the seller in any purchase or sale. And that word commission, going back to what you're saying earlier, commit means to put together. To put something together is why we earn a commission. If we don't put it together, we don't make anything. And we take all the risk, and then we receive a reward for putting it all together. Okay, great. I think that the key in putting it all together is proper preparation, which is why now is a good time to interview. Choose your broker. Don't focus so much on price. You want to get a general sense of who's got the best idea and can defend the price in what pricing is today. But the final pricing is going to be decided when you go on the market, whether that's February, May of next year, or 2 years from now. In other words, we can help you now in a preparation process that can take 3 years. We've helped some clients 5 years from the first time we met, coaching them through, and they were finally ready. Because it's not about today. It's about process, preparation, and persistence over time to prepare our clients to excellence and to be successful. So that's why it's a good time, because we can guide you through. If you're thinking of next year, we can guide you through those steps, where to put $1 to get $2 back. And why not? Why not do that? Why not complete your interview process 5 months before you're going to go on the market and know who I'm going to work with, and then have that coaching and guidance so that you're not stressed out as a home seller just before you put the house on the market.
Awesome. Robert, why is now a good time for me to call you or Eric or somebody in the Eric Stewart Group to come over and give me an idea of why, when I want to sell, is in 2023?
As Eric says, a great question, and it has to do with preparation more than anything. yeah, can you put a house on the market the same week that a seller calls you that you need to get it on the market? Yeah, you can do those things, but you're gonna also miss a lot of steps to properly present the house to the world. Remember, this is like going to see a play, right? Like there, everybody's working behind the scenes. Curtains are down. The moment comes where the curtains, come up, and then you show the house, and the show goes on. That's exactly what we need to do here. So right now, advantages of listing a house right now is we can still do exterior photography for your property while things still green or starting to look like a light brown out there. That was what I referred to the trees and all of your landscaping. You can do that. Some people also like to, the months and dates ahead. People are gonna, prepare their homes for Halloween, autumn, then Thanksgiving and other holidays. And sometimes houses actually do look very nice. And some people might want to just to show a whole different perspective how the house is probably going to look at during the Christmas season or any holiday they celebrate. So this is the time to do it. You're not in a rush. It's not like the spring market, it's around the corner. You need to do it immediately. If you need to declutter and paint and remodel, this is the time where you can start getting the bids, starting to do the work, prepare ahead of everything. So when the month of the end of January of 23 comes, you basically said, okay, here are the keys to the house. Now do your magic. And that's exactly why we say start ahead of time so that we can do it well. And we have different preparation timelines. As I said, we can do 30 days, we can do 6 months, we can do 90 days, we can do 1 week. But keep in mind that also changes a lot of things in terms of how well the house will be presented to the public. And now, remember, it's just who you hire now than ever matters the most. So just be careful with those realtors that tell you they can make it happen in 24 hours and they take pictures with their smartphones on landscape versus portrait mode, right?
Yeah, the other thing too, timing wise, right, proper preparation. This is a good time to take photos of the outside of your home. It's still lush. The trees haven't dropped all their leaves, although they're going to start and have kind of already started with the rain we had. Started to fall, but still things are lush, green. Perfect time for photos now, especially if you're going to go up in February or March or early April, when things will be either white, cold, and ugly, or they'll be very thinly green. So it's a good time to start an interview process. I mean, just do it. Pick up the phone, give us a call, and one of our team members will respond, come out and meet with you. It's toll free 800-900-9104, or go to ericstewartgroup.com. And as Amir said, we've got these guides, this one called the Market Ready Guide, which is just, I wrote this to give you a sense of the timing, how to put $1 to get $2 back, even how to interview a realtor. Because for those of you who don't know, I've been doing a radio show now for almost 20 years, and I'm on Saturday afternoons at 4 p.m. live on 105.9 FM WMAL. We talk real estate, we talk economics, a lot of things we're covering here, and that process of conversation, discussion now, and preparing your home for sale is one that we consistently encourage, regardless of who you ultimately choose as a realtor, because that's your decision as a seller or buyer. We encourage you to contact us. And as you're talking to different brokers, give us a shot. It'd be worth your time just to get our impressions, and then you decide what you want to do. So, all right.
Yeah. So we have some time left, and I did want to just quickly cover this, and maybe you guys can pitch in where I may have missed some things. As you see in this graph, when you see quiet listing, we will make sure that your property, from a marketing perspective, because that's huge, right? We don't sit here and pray that your house sells. We're going to make sure that it sells. We're going to do everything in our power, because the times have shifted, right? We're going to do everything in our power to make sure it sells. So when you see quiet listing, through the many years that Eric, New York Stewart Group have been in business, we've developed a huge builder list that we can go after. We've developed, we have internal systems. We have we have thousands of buyers in our systems that we can put your property in front of, so we can see where that gauge is. Do you want to sell? Do you not? Whatever, so on and so forth. And all of this stuff that you see here, these aren't things that you're paying out of pocket for immediately. Like, we give you a consultation with a stager, because again, we value educating so much. We value helping you get the best return of investment. As Eric said, where can you put $1 in, get 2 out? A lot of times, and I've heard these guys say this around the office a lot, is that, clients will go and repaint and do this, and this. And then at the end of it, they're going to want their money back 2 to 3 folds over. It's like, well, you didn't make the improvements that would actually net you those returns. So this is why it's so important to talk to an agent who has experience, so they can tell you, hey, this is the best thing this is where you should make the improvements. This is where you can get 2 back if you put $1 in. We mentioned the exterior photos. We had a client, and this was a while back when I was working with Eric directly. We had a client who wanted to put her house on the market when I think she had azalea trees or something in front of there was a cherry blossom trees. And she only wanted to put the house when the cherry blossoms were blooming. Well, that was only like a 1 week, 2 week span. So when you make those decisions, right? When you work, when you want to just do, oh, this is when this blooms, this is when I want to sell it. It doesn't work that way. This is why you hire us, to give you the best advice. But we would take the exterior pictures now. We can work on interiors while you're decluttering, because we want to show that beautiful of a home. And that's why you see right here what these guys mentioned is the final price comes at that back end. The marketing prep, we're working on it as we're doing it, but it all happens at the end. So right before your house goes on the market, we flood the market with information about your home, not dripping in there little. We do that dripping all the way from month 1 all the way to when we're about to launch into it. Right. I don't know if I missed anything, but again, like Robert or Eric had mentioned, we can do this in as little as 7 days to as far as 5 years. So it's never too late, or it's never too early to talk to an agent who can help you and coach you through this huge process. Gentlemen,
can I just add one thing to that, absolutely, if you don't mind? So as a real estate agent, seeing the inventory in real time at that moment should give the agent the insight to be able to guide the seller on whether taking time to prepare is going to make them money or not. I've seen plenty of homeowners chase the market by over preparing over time and then missing the demand cycle. Okay. So for instance, if you hit the market early, the timing is more important than the condition, even though condition is important. And this time of preparing your condition is to your advantage, because we have some time before the start of the spring market next year. Great. We see that. We see that this timing is good. Now, I just went on a listing appointment and took a listing in Bowie, Maryland. And this was a referral. And in meeting with the seller of the property, there's clearly some work that should get done from a condition standpoint now to put that property on the market, to not have those objections of condition that might cause a buyer to say, it still needs this, or it still needs that kind of a thing. However, there's nothing for sale. And in spite of the desire to spend that money and put that money, that $1 to get $2 back, I think the timing is more important at this moment in time, simply based on the actual number of homes for sale in that particular area. So I've encouraged my client is, hey, we'll concurrently, same time, we'll be working on 2 things. We want to get your home on the market. We'll have a contractor come out and just button up a couple things, take pictures, and go on the market next week, rather than take the 3 to 4 weeks necessary to do everything, because we think we're going to get a better response right now. Point is, you need a real estate agent who can read in real time the demand that exists and step into that with conviction. Where we put $1, we get $2 back, that makes sense, but it may not make sense within the demand at that moment in time. So got to read those 2 things against each other.
Awesome. Robert, do you have any parting words for us?
All I can say is that this is a time to stay positive, be positive. I know that it's a lot of realtors out there that only probably been licensed for the last 48 months or a little over than that or less, don't know what to do, and they're acting in fear. They're acting in scaring consumers. And remember, if you look historically for the last 60, 80 years, we always have had up and downs in the market, high interest rate, low interest rates. Some of our people that bought houses back in the 50s probably were paying, 12, 15, 17% interest rate. So now we're scared because it's a 6.75. So it's a much better deal than before. So I would just say that this is the time as realtors to continue to be professional and bring hope, bring opportunities to clients, because that's what the public wants, and a realtor that can put things together.
Awesome.
That's it.
So, with that have said, as we mentioned a few times during this broadcast, if you guys want access to these guides, please feel free to call us at 800-900-9104 or visit theerickstewartgroup.com. You can get both of these guides there if there's any questions. We have videos and blogs about the 10 questions you should ask a realtor before you hire one. Everything you are looking for, whether it's selling today or 5 years from now, is in these guides. It's in our resources section. Feel free, and they're all free. There is no obligation. There is no gimme. It's free. It's there for you. Read through them. If you have any questions, reach out to us. We will be back in 2 weeks. Then that will be the 19th of October. And what we're going to talk about then is we'll discuss maybe any changes in the market, but we'll also talk about the pricing, how do we get to the price, right? What are the factors that go into it? How does condition, some of the things we talked about today, factor into that, and so on and so forth. And then we'll cover a little bit of marketing, my favorite topic of all time. We'll cover a little bit of marketing and what we do at the Erick Stewart Group, why that marketing is so different, so much better for you. Maybe a little biased, but not too much. So much better for you than what you get out there. Thank you again for joining us. We're so glad to be back, and we'll look forward to seeing you guys in a couple weeks. Bye, everyone.
Thank you.